You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
Join us now for the expert source for inside information on the options markets. It's time for Options Insider Radio with your host, Mark Longo.
All right, everybody. That music means it's Tuesday. That means it's interview day here on the old network. Time for us to welcome on guests from throughout the world of options and derivatives and proceed to pick their brains for the benefit of you, the listener. Next up on the old program is a repeat offender here on the show, even though she hasn't been on in some time, and a lot has happened since then. She is Arianne Criqui, the Senior Vice President and Head of Derivatives and Global Client Services over there at the Cboe. Arianne, welcome back to the Options Insider Radio program.
Thanks, Mark. It's great to be back. Thanks for having me on your show.
Yeah, the last time we did this, we had the fun of doing it in person down in D.C., and I'm not sure if you noticed, Arianne, but a lot's happened since then. A lot's changed in the world. Now, before we even get to that, we had this scheduled a couple of weeks ago. Of course, Mother Nature intervened, as she is wont to do here in the year of 2020, and the hurricane swept through your part. So I'm glad to see everything is working now and in proper order over there, Arianne. Everything's back to normal over there in your area of New York?
Yeah, we are. I'm quite sorry about that, but can't get in the way of a hurricane and some tornadoes, actually. Lost power for about 24 hours. Fortunately, I think some people lost power much longer than that, but happy to say that everything's better now on the East Coast.
Mother Nature is certainly throwing her weight around this year here in 2020. We even had some microbursts ourselves here in Chicago a couple of weeks ago, I think, as the remnants of one of those hurricanes kind of drifted through the region. So it's fun for all and sundry around it. Speaking of fun, I was mentioning at the top of the show there, Arianne, that we're not doing this in person this year. We're actually beaming you in remotely because a lot has happened since the last time you and I chatted. The pandemic, civil unrest, a lot of things have been stirring the pot there since the last time you and I chatted. So let's start there. Let's go back to the early days of the onset of the pandemic, February and March, and through the madness that was March and April. A lot has happened. The market shifted to 100% electronic on the options front for the first time in its history. We saw unprecedented volume and volatility flowing through those pipes. At the same time, everyone had to work remotely. So there were a lot of things going on, a lot of curveballs being thrown at you. So walk our audience through what the last 6+ months have been like for you guys over there at Cboe as you're managing kind of one curveball after another.
Yeah, no, it's been an unprecedented year, as you mentioned. You alluded to this. There's record volumes, especially in the U.S. listed option marketplace in the first quarter, and where you're continuing to see them in the second quarter, even when we had different trading means. Whether you're working from home or you're on a trading floor, people continue to be very active in the marketplace. I think that you look at the current market dynamic where you see a very active participation from the retail community, quite frankly, driving a lot of this interest, demand, volume, and the overall direction of the marketplace. Whereas on the flip side, You tend to see you are seeing the institutional investors maybe having a little bit more of pause, caution, waiting on the sidelines, quite frankly, to get more clarity not only around the long-term impacts of the COVID virus situation and a potential vaccine, but you're also curious and questioning what's going to happen around for the global economy and the impacts of this COVID pandemic and how it's going to impact our day-to-day lives and the overall business globally. Therefore, we see a mix in terms of who's participating, who's most actively participating in our proprietary products, and who's waiting and seeing for more direction, let alone what we're facing in November, which is the U.S. elections, and what outcomes could transpire following those results.
Well, there's a lot to unpack there, but I'm curious. For me, I was very surprised over the early part of the pandemic when the markets transitioned to a fully electronic environment for the first time. Maybe it's my deeply cynical nature, but I thought there would be a whole host of issues and problems that would result from that. And we really didn't see a lot of that materialize. I'm curious for you, were there any interesting surprises or takeaways during this past 6 months that maybe you weren't expecting when all this kicked off?
From our vantage point, we clearly have an electronic exchanges as well as an open outcry traditional floor framework. The transition off of the floor into all electronic was seamless. Our liquidity providers were well prepared. Our investors, our facilitators were well prepared, and the floor brokers were all well prepared to take this initiative and maintain quote quality, even in the early days when the volatility was significantly higher, and maintained strong trading patterns where I think that customers continued to get the trades that they needed to get off, and the execution was great. So surprises, no. Maybe surprises to the fact that there were no significant surprises, that we were able to act efficiently, effectively, speaking not only of the Cboe, but all of the options exchanges holistically, to continue to operate one of the most liquid markets in the world.
The last time we chatted, one of the discussion points was the prospect for this transition to the new trading floor over there at Cboe. Obviously, a lot has intervened since last October. Of course, we're back to a socially distant trading floor over there on the Cboe now, but there's talk here, even in the Chicago area, if the numbers get up, of maybe having to shut things down again. So I'm assuming the COVID pandemic and all the ancillary issues has put the talk of the new trading floor on hold for the time being over there in Cboe land?
As you alluded to, Mark, we took our traditional S&P pit, which was the baseball diamond stadium, 250 plus individuals shoulder to shoulder, and we transitioned that shape into a rectangle. As you mentioned, social distance, we're probably about 56 to 57% of capacity at this point. And tried to continue to maintain fantastic execution quality, core quality, and liquidity for our users who actively participate in open outcry. That has gone very, very well. The feedback has been great. Even there's a point where the market makers want to continue this shape and positioning within this new floor framework. What that has also led us to do is to consider expanding that footprint, making it a slightly larger rectangle, to add more individuals to get closer to, but not nearly 100% capacity. We have interest and demand from these TPHs that want to have near full representation, because they believe that not only that the volumes have continued to increase, but are expected to increase as we approach the U.S. election. So we're making the steps to increase a current framework and footprint in the existing building to accommodate that in our S&P pit in particular. And we're going to maintain that for the foreseeable future. Foreseeable future, Mark, can be over the next couple months as we continue to monitor the situation with COVID.
Yeah, that foreseeable future window has certainly narrowed over the course of 2020 here. Who knew all things geometric shapes would be cool and fun again as you're playing with new setups down there on the floor of the Cboe. Speaking of new things, or maybe not so new, maybe a bit of a return. Let's get to the big news here in the vol space over the past couple of weeks. Of course, you guys relaunching the mini-VIX futures back on, the 10th for most of our listeners to get out there on that Monday, even though I think they technically launched on the overnight hours there of the 9th. Maybe, Arianne, for some of our listeners, maybe they've been under a rock. Maybe they weren't aware of this. Catch us up. What exactly are these mini-VIX futures? Obviously, 1/10 the size is the big leading narrative. If there are any other tweaks you want to let our listeners know about, have at it. And also, how did that early launch period, how have things been going so far?
Yeah, no, that's great. I think you nailed it in terms of the description, Mark. It's, as the name implies, the mini-VIX future is the smaller scaled version of our standard VIX futures contract, but with all the same contract size. The minis offer the same utility, but 1/10, as you said. So you're requiring less capital to achieve the same exposure. I think, in terms of the traction and the, we've seen thus far, it's been a strong participation out of the gates with more than 24 firms participating, including proprietary trading firms, brokerage firms, and lead market makers. As you alluded to, we went live just over 2 weeks ago, and out of the gates, we had strong participation, which has continued. Well, we've seen trading volume reach well over 340,000 contracts, and we're averaging just over 31,000 contracts per day. Quote quality, most importantly, in my opinion, during both our regular trading hours and global trading hours has been excellent. We're showing strong markets not only in the front month future, which is currently September, Mark, but in the backdated, OCNO and DEEF are also listed, and they're also showing equally as strong quote quality and liquidity for our investors.
Why bring these back now? And I mentioned bring these back because these existed back a long time ago. I'm embarrassed to admit I barely even remember that they existed when you first announced the relaunch. I had to go back and look for myself. So obviously not a lot of traction in the early version of these. Why bring these about now? Was this kind of always on the docket for in the middle of 2020, or was this something like we alluded to earlier? We've seen this dramatic resurgence in retail traders during the pandemic. Was this a response to that? Why bring these out now?
Yeah, no, great question. We believe that the current market environment is conducive to relaunching this mini-VIX futures. Given the expansion of the number of these, mini and micro derivatives contracts that have become available to not only the futures marketplace, the options marketplace, and we're seeing and hearing those demands from our customers. They wanted to see a smaller size. In particular, you have CTAs and the retail investor base that was looking for that smaller contract. And, I think we were a little ahead of our time at that, call it 10 years ago when we first launched. And we do think that this time and currently with the success we're seeing was the right time to relaunch the contract.
Yeah, certainly the mind share for VIX back 10 years ago, nowhere near what it is out there, particularly with the target audience for this product, which, of course, the retail traders out there. Since we're talking about VIX futures, let's talk about the mothership for a second as well. It's no secret out there. A lot of outlets have been talking about and analyzing. We've been talking about it on our Volatility Views program for the better part of the last year. What's been going on with overall VIX futures volume? We saw a resurgence, of course, when volatility exploded up to 80 back in the madness of March, but it's kind of waned since then. I've heard a lot of people expound in a lot of different theories about why they think VIX futures volume hasn't remained robust through the pandemic. I'm curious for you, Arianne, what are your thoughts? Why do you think the VIX futures volume has languished over the last few months?
Yeah, no, it's a great question. I alluded to some of it, but we'll dive in a little bit deeper. But, you saw an intense increase in volatility early in 2020 amid the COVID pandemic. And we had a very strong interest, not only in our proprietary products, S&P options, but VIX options and VIX futures. And that drove the demand, of that product. you were witnessed, but what you saw was a transition mark of, the VIX index, especially in the second quarter and into the third quarter here is, well above means, and averages for VIX tends to be 18 or 19. And we're still at this point sitting around 24 for probably the last 100 plus days. That creates a dynamic for investors that can be very challenging. And we've seen investors who traded the product but quite frequently as we led into the COVID and the spike in volatility, potentially removed or exited transactions or exited those positions and took a breather and said, there is a significant amount of uncertainty, clearly with the levels of volatility and where they sit today, that allowed them to pause before they're re-entering. And we're starting to see that demand return into not only VIX options, but VIX futures over the past several weeks as we're starting to see the market continue to rally. There's further clarity with the global pandemic, and kids are potentially returning to school. And I think that's when we're starting to field and see these institutional investors and retail investors reemerge and start to transact with this product. Same dynamic happened in 2008 and 2009, as you remember, where there was a pause here before we started to see the re-entrance and emergence of our investor base for this product in particular.
There's an interesting dynamic with this product out there. There's obviously a lot of people utilize it as some sort of portfolio hedge or a speculative tool for dramatic upside and volatility, and they got it. They got what they wanted back in March. We got up to 80 plus out there in VIX land, and then it took a while for it to kind of come back down. So a lot of people took those hedges off, and they probably weren't about to just go dive right back in with a new hedge when VIX was still north of 50 for some time. So there's this weird dynamic where after there's the explosion, people have to kind of wait for it to reset before they get back in, maybe around the mid to low teens, maybe sometime in the low 20s where we are right now. Is that kind of your analysis as well? People are waiting for it to reset so they can put those hedges back on again?
Yeah, I think that's a very fair analysis, Mark. And I think that, we talk about volatile, or the risk in that trade is exponentially higher when you're talking about forward volatility. And people, investors have recognized that the trade, when volatility or VIX is in the levels of 30 and 40, it is a very tenuous and still a significant amount of risk in the transaction. But there was a pause and wait to the levels to recede or mean revert back to the levels you were discussing, whether that's 20, 15, or even 17. And, that's the kind of the dynamic we're seeing as we are starting to see many investors reemerge into trading VIX futures and VIX options.
A lot of people have also pointed to the implosion of XIB back in the VIX-ocalypse, Volmageddon back of February 2018. There's never really been anything to come back into the market to replace it, because obviously XIB required a lot of rebalancing, drove a lot of VIX futures volume. Maybe, potentially, it's this new SVIX product that's on the horizon here, Arianne. But do you subscribe to that theory? You think we need a healthy and robust ETP like an XIV or an SVIX to really get VIX futures volume back to the levels it used to be at?
No, and I think that's, there's probably 2 points there. We think that's one reason why we're launching the mini-VIX futures, because we're diversifying our investor base and our user base. And we're seeing that, thus far with the success of the launch. And our volumes are coming from multiple different or new participants within the VIX futures complex, which is great to see. I think that, we're talking about the VIX ETP ecosystem, that has been a very active and critical part of the original VIX standard VIX futures contract. And it has been a success story to allow investors to utilize different products to gain access to volatility. And it's been a great success story. We're excited to see that there are 2 new ETPs that are going to launch in the third and fourth quarter that replicate or provide similar access as the double levered longs that have been unlisted or delisted over the prior couple months. And I think that we've also seen, a shift from the ETP that's delisting into existing ETPs, showing us that there continues to be demand for this exposure in an ETP format, in addition to obviously what we're seeing in the mini-VIX futures contract. Clearly, the difference here that you're alluding to is someone who's transacting or gaining exposure to volatility in a securities account or in a futures account. Both are very viable today, and expanding and increasing and enhancing the ecosystem of trading our VIX index.
So talking VIX futures as well, another big talking point we've hit on pretty much every week, even since before the pandemic, since back in the early days of January here, was just the dramatic amount of volatility that the VIX futures were pricing in around the election cycle. Back in the beginning of January, we thought maybe it was a little bit extreme. And then, of course, so many other things happened to take our gaze away from election volatility in the intervening months. But now it's back firmly on our radar. It's coming up here in a couple of months, which sounds crazy when you say it out loud like that. But the election is approaching quickly out here. And it does seem like the VIX futures are pricing in a very volatile election season, if not beyond. Arianne, is that what you guys are bracing for over there at Cboe, a very volatile season coming in the next couple of months?
Yeah, I think you alluded to what we're watching from the term structure. So there's clearly a kink in the term structure around election of both October and November. We are seeing increased demand for our proprietary products and hedging around those events because there is uncertainty around the U.S. election and what that could, the results could mean to the U.S. economy and global economy going forward. And I think that creates a trading dynamic and a trading opportunity that we're seeing many participants, take direction and invest around those events. Following the election, hard for us to predict at this point, but we are seeing a lot of interest in and around the November election.
Yeah, it certainly is scary. If you believe what the VIX futures are pricing in, they're pricing in a lot of uncertainty all the way through Inauguration Day and beyond, Arianne, which hopefully we don't see a scenario like that where we don't know who the president is going into January. I think that would probably be too much. Already we've had enough volatility this year, Arianne. I don't think we need that much going through January.
I think as a volatility trader and one who's very interested in derivatives, we do look for these and get excited for these types of events. But there are times where maybe too many of them are create fear and people are hesitant. So in any regard, one event is okay for a year, Mark. Maybe not two or three.
Yeah, I think we've had our fill for tumultuous volatility events. People used to ask after 2018 when we had the record volume. People were coming on our network in the beginning of 2019 and asking us, "Do we think we could ever reach those levels again?" And so I used to joke, maybe be careful what you wish for, because maybe society doesn't want what it will require to make options volume and volatility really return to those levels. And lo and behold, here we are, Arianne, 2020, a year where I guess the tagline could be careful what you wish for.
I view it very positively. I think that there's, an aptitude and an understanding for many more participants to understand a levered product or a derivative, in addition to just transacting equities. And I think it's good for the overall investor ecosystem. And this growth and this demand is unprecedented and exciting. And we I think we're going to continue to see more and more investors be more active in the U.S. listed options and futures marketplace, which I think is great to see.
Well, since I have you on, Arianne, I want to pick your brain on the product front a little bit, too. We're getting a lot of questions from our listeners on a wide variety of products, including a very interesting one that kind of went dark back in, I think it was May or so, back when all the madness happened around crude oil. Of course, I'm talking about OIV. That was the index, effectively the VIX of the WTI contract that you guys issued jointly over there with CME. Obviously, the product had some hiccups around the negative futures period. That since has been rectified. And a lot of our listeners like to watch that product. They like to use it as a gauge for crude oil volatility sentiment. And they've been asking us if we have any updates. So I will turn that to you, Arianne. I know, again, this is a joint issue with you and CME, but still, it's an interesting one. Certainly our audience is interested in. Do you have any updates for them on the potential future of OIV?
Yeah, no, Mark, I'm probably going to pass on this one just because of the interrelationship between CME and ourselves. So not too much of an update there. Obviously there has been, some corrections and rectifies of the contract, but, prefer not to comment here.
No joy for you OIV lovers out there yet, listeners, but we'll stay on it. We'll see if we can get some updates for you. Speaking of CME and products, kind of interesting, they entered the volatility fray recently with NASDAQ, a product that Scott Nations has been putting forward in some capacity for a while, first with ISE, then, of course, now with NASDAQ, and now in this new iteration of VolQ with CME. So adding a new wrinkle to the volatility space, I'm curious, what are your thoughts on a new addition to the volatility marketplace out here, Arianne?
Yeah, no, this is, not the first time, we've seen a competitor enter the exchange-traded volatility space, and Cboe welcomes new products that may contribute to the development of volatility, as we've discussed about today. Since the introduction of VIX futures and options, many products have entered the space that have helped us grow the VIX product volumes and establish volatility as an asset class. So we believe that, any trading potential, for volatility-based products dependent of traders being able to hedge these products are likely going to use our liquid market and VIX futures and options. So we would expect to benefit from the hedging flow that would potentially result from other volatility-based products. So frankly, we're excited to see this addition to the volatility-based and tradable asset class.
Unfortunately, Arianne, that music means we've come to the end of our journey here on Options Insider Radio. I appreciate you joining me here to shed some light on all the things going on in the volatility complex over there in Cboe and indeed beyond. But we like to leave our audience, especially in these dire times, with a little bit of optimism, a little bit of something fun to sink their teeth into. So, Arianne, if you have any hints, any teases of what's coming down the pike that they can look forward to from you and your team over there at Cboe, now is the time. The floor is yours.
Great. Thanks, Mark. I think the one other product that I'd love to mention is that we will be, looking to launch S&P ESG options later this month. You will be hearing from our communication and marketing teams as we look to list these contracts by the end of September. Again, this is going to be focused on the S&P 500 ESG index. And we know that ESG has been top of mind for not only the European investor base, but the U.S. and global investors that are strictly focused on these initiatives to make environmental safety and governance top of mind for all companies in participating within this index. We think it's going to be a great launch and have seen some successful futures as well as option contracts already listed in this space. And I welcome the opportunity to talk about it when we launch later this month, Mark. That'll
be certainly fascinating. We've had a lot of inquiries from our audience about products like that, and there hasn't really been much to talk about with them. So we'll look forward to that launch area, and we'll have to get you back so we can break down those products and all the other things going on in the marketplace in the coming months here.
Great. Thanks again, Mark.
Thanks for joining us, Arianne. Thanks to all of you out there for tuning in on our Interview Tuesday here. Make sure you stay tuned throughout the rest of the week. A lot of great content coming your way. Of course, we have Boot Camp tomorrow. Advisor's Option back on the network tomorrow as well. That should be fun. Hurricanes notwithstanding. We'll see if we can get that one in. And, of course, Options, Playbook Radio. And, of course, Thursday, TWIFO Option Block, Volatility Views, of course, on Friday. And it all kicks off again on Monday through to Tuesday for more of Options Insider Radio.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/The Options Insider, or via questions at theoptionsinsider.com.